Alright, what's up everybody? Welcome back to another brand new video, and the week has just been insane. Look at this! Just last week, in my last video, we were up like, I think $94 for the week. All gone, because Aaron, stocks only go up, right? No, they go down. I am down 7.5% this week, which is a $91 loss, which is kind of a lot. But if you did watch my last week's video, you would know I did wish for a little pullback, and it looks like we're getting it. So, and just a quick little update for you guys. I am not feeling too well. While this whole week we've been going down in the whole stock market, I've actually been diagnosed with coronavirus. My brother got it before me about a week before, and now it's finally hit me. I'm actually on the come down. I'm slowly recovering. I'm on my day 6 of symptoms, but overall I'm feeling better to make this video. So if my voice sounds a little low or like a little raspy, it's not coming out right, just know I'm still a little sick, but that's not going to stop me from making my weekly video. So we're going to talk about pretty much why the stock market just went down for the week. I've been doing a little research, and mainly some of the reasons that I found really a second wave of coronavirus people are fearing, but I feel like you can't really call it a second wave if we haven't even gotten over the first wave. Like, let's not get ahead of ourselves. The whole thing never dipped. It's still going up in the US. Like, there's no second wave if we haven't finished the first wave. The other reason I have found through my research was watching a video from Andrei Jikh. He explains it way much better than I'm about to. But pretty much, investors and like everyone in the economy is worried about the strength of the dollar. They think it's getting weaker. But in Andrei Jikh's video, he points out that yeah, it may look like it's getting weaker right now in the short term, but if you pull back the length, you can see the strength of the dollar has actually gone up. And right now we are seeing little pullbacks that is scaring people, but those are mainly the two reasons I found for the sharp decline in the stock market this week. As for the portfolio, we have actually bought only one new stock for the week. That is UTG, which I am down $3.25. The reason why I chose UTG was, one, again, it's another ETF, so it's kind of safe. This is more of a sector ETF. This deals with utilities, so it's pretty good. I want to add some more utilities. The main kicker behind this ETF was it pays monthly. Here we are on a Seeking Alpha looking at UTG, and it pays an annual payout of $2.16, monthly payment of 18 cents. It's freaking awesome. It's just really to add to the monthly growing portfolio. I wanted something different besides SPHD, which I do plan on buying a little bit more shares of. But that leads me into the point of this video and probably why you clicked on it. As we're going through this little downturn, this little pullback, which I think is going to carry on into next week. You guys may be like out there looking and wondering, what are the upcoming plays? What is going to make us money from now? And I'm going to tell you guys my personal 3 upcoming stocks that I either own, I'm going to be acquiring more shares, or I'm going to be buying, adding to the portfolio. So remember, quick disclaimer, I am not a financial advisor. I'm just a small YouTuber, and take everything I'm saying with a grain of salt. Do your own due diligence, do your own research. So with that being said, let's get on to the first pick. All right, guys, and our first pick that I'm picking and will be acquiring is Dover, ticker symbol DOV. Now, this has been a stock that I think is a little underrated. I don't really hear a whole lot of people talking about it. If we look at its 5-year, it's looking phenomenal. Look at this growth, up 62% in the past 5 years. It does have a small dividend yield. We're going to be breaking down some of the analytics, but this stock is an industrial stock. They mainly operate under 4 segments, which are, I have right here: energy, engineered systems, fluids, refrigeration, and food. For energy, they do dabble in a little bit of drilling and production of oil and gas. The engineered systems is mainly from printing to waste handling, whatnot. Fluids, they operate in the safety, handling of critical fluids such as oil and gas, retail fueling, vehicle wash, chemicals and stuff. And then refrigeration and food equipment, they produce like gaskets, little nuts and bolts for stuff like that, and food labels. So they're kind of like an essential business pretty much as we've gone through this whole downturn. They're not really that affected too bad We pull up the 3 month. Well, I guess the 1 year is a little more better. You know, they peaked at 117-ish, 119. They bottomed at $66. Currently looking at $96. Right now, where it's standing, it's still not that bad. It's under the $100. If we look back at the week, you know, it was hovering around 108. You know, it's down $11 currently right now. Like, so at 96, it's not that bad a grab. I'm waiting to see if we can see a little bit more pullback. If we're diving into the analytics, you know, the dividend yield currently right now is 2.03%. It pays annually of $1.96. Has dividend growth of 17 years. Pays out quarterly, 49 cents. Currently, it has grown for 64 years, consecutive straight years. That is a long freaking time. This stock is beyond safe. I think it has potential. It has lots of upside as we kind of get the whole industry kind of going, the economy back to rolling again. Again, right now, $96, it's not looking bad. I'm hoping we can probably drop down maybe below 90, start hitting around the mid 80s, and then I plan on picking up a share. My second stock pick would have to be Qualcomm. So as we've known, the entirety of the tech sector has actually outperformed the general S&P 500 and the general stock market. If you want to see long-term growth and major profits, you'll want to get into the tech sector in general. Like, the amount of growth behind this whole sector is insane, and I think Qualcomm fits the bill. Right now, if you look at the tech sector, a lot of stocks are very overpriced, or they're just really expensive to get into, and you need a lot of headroom. Qualcomm, you know, it's under $100. It's $85 right now. The past week, you know, it was hovering around 92 to about 90 bucks. You know, it's at 85. It's not bad. During the whole crash, let's pull back a little further. There, it bottomed out at 60 bucks, peaked at around right there, 95 bucks. So we're kind of near that tail end, or we're actually like near that tip. We're 10 bucks below. We're at currently 85, but 85 for me is still not bad. And let me explain why. This company deals heavily, or is going to be benefiting heavily from 5G. As we know, 5G is supposed to be faster. It's actually 20 gigabytes faster from what my research was. So 5G is actually significantly faster. And Qualcomm is definitely going to benefit this, as they do produce a lot of parts for iPhones. So let's dive into a little bit of analytics. Let's pull back a little bit. It pays $2.60 per year, quarterly 65 cents. So that's not even a bad dividend payment. Its payout ratio is a little high at 70%. You know, this company, looking at its balance sheet, it does hold on to a little bit of debt, but I think the overall benefit and kind of the risk to reward ratio is greatly in your favor. Diving into financials, looking at total revenues, from what I can see, because I haven't paid for any of this yet, you know, right now it's looking a little bit flat, a little horizontal, but things are expected to pick up once 5G has rolled out. A lot more companies are implementing it, and the towers are all set up. 5G is going to be the wave. If you want to catch it and catch on a low-cost tech stock that's going to generally outperform the whole market as a whole, Qualcomm would be kind of that play. All right, guys, and the third and final pick. Oh my God, it's got to be AMD. This right here is my golden goose. Now, for those who may not know, I am a complete computer nerd. I love computers. I actually built my PC right here next to me that I record and edit everything on. I also run it on AMD, which is the company we're going to be talking about. So this company first was kind of an underdog in the whole computer scene. You know, if we're looking at the total market, Intel predominantly has been dominating. They've been dominating since early 2000s. You know, and what I mean is, when you go to Best Buy and say you're trying to buy like a new computer, right? You see the HPs, you see the Dells, the Lenovo's, and you see the little stickers on the laptops, right? It'll either say, or most of the time when you were shopping, it would say powered by Intel. That's because Intel was producing processors, and the processors, for those who may not know, if you're not really into a whole lot of computers, it's also when you're going to the computer and you see it says i3, i5, i7. Now, for those who they generally know, you want the bigger number, the i7, the i5. The i3 is cool, when you're trying to get into computers. This is really dumbing down what the CPU does, but that's pretty much generally what it was. And Intel controlled that market. You went to buy a computer, it was always powered by Intel. 2014 rolls around. A fabulous CEO woman by the name of Lisa Su joins AMD, and she has totally turned around the whole company. As someone who is an enthusiast for PCs, AMD has completely changed the game. They introduced new lineups called Ryzen CPUs. Pretty much all of them outperform Intel CPUs. Intel has been, as I said, dominating the whole market in terms of CPUs. Now it's AMD. AMD Ryzen has flipped the script. They are cheaper, they generally perform better, and they're pretty much what everyone is building their PC off of. Mine is built off a Ryzen 5, which is pretty much more powerful than, say, a little bit older Intel i7. AMD has flipped the game. But the reason why I see so much potential in AMD coming forth is, one, now that they're dominating the market, they are set to release their 4th generations of new processors, which will again just solidify that they're making the best CPUs, because Intel just released their next generation of 10th gen Intel processors, and they're a little bit underwhelming. If we're looking at the latest 3rd gen Ryzens, they're still outperforming, or that 3rd gen is still going to be outperforming the new unreleased Intel processors, and the 4th gen is just supposed to kick it out of the park. But the real reason why I'm betting all on AMD is because of the new Xbox and the new PS4. So if you want to get in on this tech market and you don't have a lot of money, AMD's the way to go. It's only $53 right now, and I'm seeing this thing going up to maybe at least $80 by the end of the year, to be honest, once that new Xbox and PS4 kick around. That is because both of them are going to be running off AMD's Zen 2 architecture CPUs. In terms of the graphics power behind the PS5 and the new Xbox, they're going to be running off AMD GPUs. And with both of them running off AMD GPUs, they're really going to be implementing new technology, which is called ray tracing, which is going to just enhance the graphic power of the game, such as dealing with shadows and lighting and particle effects. And AMD has that technology. And I'm telling you, once these new PS5s and the new Xboxes come out, I'm betting AMD sales are going to go through the roof. They got new processors. Their technology is in the PS5 and Xbox. So which either one sells better or is king of consoles, AMD is going to be benefiting from both. I'm telling you, this is my golden goose right here. Anyways, that's going to do the video. Let me know what you guys think of my 3 picks, which again are Dover, Qualcomm, AMD. All for a variety of reasons of why I've chosen. But let me know what you guys think. Leave a comment down below. Leave a like. Subscribe if you're new. Again, sorry for the quality. I'm coming off a tail end of coronavirus, and my voice is really not the best right now. But anyways, that's the video, and we'll see you guys next week.